are we supposed to make of these numbers from Otis Worldwide, the world's leading maker of elevators and escalators with a huge service and repair business to boot? Earlier this week, Otis reported a small top and bottom line miss, which would have been fine, except they also had to cut their full-year forecast thanks to the weakness in China. Given how much the stock had run up in the quarter, it sold off 3% in response, but it's already recovered most of the losses. At this point, Otis is down just 6.5% off of last month's all-time highs. So does this thing need to maybe cool off more? Or a rare, and I mean rare, buying opportunity in stock that should be a real winner as central banks cut rates around the world? Let's take a closer look with Judy Marks, the Chair, President, CEO of Otis Worldwide. Learn more. Ms. Marks, welcome back to Mad Money.
Jim, it's great to be with you tonight.
I got to tell you, Judy, when I went through all the quarter and all the different panoply and the reports, I'm wondering whether you shouldn't just forget China. I'm not kidding. If every question is about China, we may be missing the forest through the trees. Is it not true that China is no longer necessarily the swing factor in be-all and end-all for Otis?
Yeah, Jim, you've got it straight. You know us as a service company, and we really had a solid quarter. Our service revenues were up over 7%. Our modernization revenues were double-digit and really compensated for that China weakness on new equipment. Couldn't be more proud of our team performing across the globe. And we returned to top-line growth this quarter, which is really a strong statement, again, compensating for new equipment. Our China business is about 13% of our total revenue for the whole company, and a third of that revenue is service and modernization, and that's growing. So, again, we know what we're doing. Our service portfolio grew another 4.2%, 25,000 elevators and escalators we added just in this quarter to our portfolio. And that really helped us drive some strong cash and allow us to do our capital allocation. We bought back another $200 million a share of share repurchases. We're going to do $1 billion of share repurchases this year, $600 million of dividends, and really make sure we return the cash to the shareholders.
Now, I had a conversation with Tim Cook yesterday before he reported his quarter, and of course, everyone there, too. It's the same thing, China, China, China. I said, how about India? And India is going to be the big growth market. That's 1.4 billion going to 1.6 billion. China may be 1.4 billion people going to 1.2 billion, for all I can tell. You referenced India, too, on your quarter and about the expansion of your manufacturing facility. I know they care passionately about manufacturing there for them. What's the experience been in India?
Yeah, we have migrated our entire product set to India, and I'm really pleased. It's the second largest elevator and escalator market in the world. It's now a 75,000 unit segment. We've got #1 share, and we needed more capacity. In India, you have your supply chain local, so we manufacture elevators and escalators at our Bengaluru factory, but we were running out of space. So we bought the land next door. I was over there last month, and we are going to expand. But you do it more than just for having a local supply chain, because we do manufacture local for local everywhere in the world, including here in North America. You do it to be cost competitive, Jim. And that's where you get your market share growth. You bring your new products to every market locally, and then you serve them, as you know, for 20, 30, 40 years. We modernize them and refurbish them at about 20 years. And it just drives that service flywheel that is the key to our business. Well, our margins are going to grow this year, even with the challenges we face in certain new equipment markets. We're still going to grow 70 basis points of margin expansion. Well,
I think it's great that you bring this up. I'll tell you what I think has been the difficulty for our viewers, but I think some of the buy-siders get it. At the end, I would be like calling Larry Culp at GE Aerospace and say, wow, Boeing's not making any planes. I guess that's really bad for you. And not realizing that their business is a service business, and that the fewer planes are made, the more money they make. To some degree, the idea that they're not putting up huge apartment complexes right now in China doesn't necessarily mean that you do badly, because they have already an existing group of places, and they care. As I've worked with GE, I worked with a bunch of companies this week that are in China. China cares passionately about safety. People don't realize that. They're passionate, just as good as we are. And so they have to have you in just like we do, if not more so.
Yeah, and it's the largest service market in the globe. We've doubled our service portfolio there since we spun in 2020. And even this quarter, it was our 8th straight quarter in China of growing our service portfolio mid to high teens. So China units are also going to need modernization. The China stimulus, the first part of it that was issued in July, is for equipment renewal. Elevators are included in that. We think that's the early part of what we'll see. But we're not counting on stimulus, Jim. We know how we need to operate our business across the globe and in China. And, you know, when we get those rules on the stimulus, we hope to hear them maybe next Friday at the end of the National People's Congress. Again, in a regulated industry, we need to understand the how. And then we'll see what happens.
Now, Judy, I know you go around the world. One last question I've got is, I'm getting good news about Europe from Apple, good news about Europe from Amazon, good news about Europe from Bookings. I speak to these companies, and they're saying, look, particularly in Portugal, in Ireland, in Italy, in Greece, the flying pig, so to speak, Spain, they're seeing real change. Maybe not Germany because of the Ukraine and because of China, but other parts of Europe are really turning. Are you seeing that?
Yeah, we've been seeing it all year, especially Southern Europe, which is where we have our largest service portfolio. It's actually the reverse of what we saw after the GFC. I was personally in Athens last month. It's unbelievable the development that's going on in Greece. And so we're excited. We've got a great leadership position there. Jim, America's bounced back really well this quarter, too. Every single segment for new equipment construction, residential, commercial, industrial infrastructure was up for the first time this year, and we booked almost 25% growth in our order book. So I think sentiment has turned in many places. America's, clearly Southern Europe and Middle East, Asia Pacific, India, Southeast Asia. And let's see what happens with sentiment with the stimulus in China.
Well, good. I'm glad we're talking about other areas, because I've got to tell you, you do miss a big move if we just focus on what's going on in China. There are other places to make money, and the service business remains exceptional in China. I want to thank you, Judy Marks, Chair, President, and CEO of Otis. Another great quarter. Thank you.
Thanks, Jim.
Mad Money's back after the break.